Everyone, and welcome to the Nathan Trust podcast. Today we're joined by Jim Power, economist. Jim is going to discuss a couple of topics with us. We're going to discuss inheritance tax in Ireland, and we're going to discuss Ireland as a location for businesses. So Jim, thanks for joining us.
You're very welcome. My pleasure.
I suppose maybe looking at inheritance tax in Ireland first, you've drafted a report for us on inheritance tax, and there's a couple of interesting points coming out of that. I suppose reading it, the first thing that struck me was that inheritance tax, the overall tax take from inheritance tax is very low. Sometimes we get caught up in the nitty-gritty of looking at it from a client's point of view and maybe not looking at the big picture, but it doesn't account for much of the overall tax take in Ireland.
No, it doesn't. I mean, the three big tax headings, corporation tax, income tax and VAT, account for about 83% of total tax revenues. Capital acquisitions tax, last year 634 million collected out of a tax take of about 83 billion. So you're talking about 0.7% of the total tax take. So in the overall scheme of things, it is not a significant tax heading. But from the perspective of the Exchequer, it is a reliable source of income. And, for those on whom the burden of CAT falls, it is a very substantial issue. So just because it doesn't account for that much of the total tax take, I wouldn't underemphasise for one moment the significance that the Exchequer places upon it in terms, as I say, as a certain source of tax revenue, but also it is seen to tick a lot of boxes in terms of equity, in terms of progressivity, and ensuring that wealth is distributed more evenly across society. So the Exchequer likes it, the Department of Finance likes it, and I think generally people on the left would like it because it's seen as a tax that does redistribute income.
Yeah.
But for those who pay it, it is very significant and is not a very popular tax.
Yeah. It is, I suppose, the overall take from inheritance tax is increasing, and I suppose that's partly a function of increasing asset values, particularly property. The rate has gone up over the years from 20% to 33%, and then the threshold, so the tax-free amounts that people are entitled to inherit, they haven't really kept pace with the increase in asset values. So I saw a statistic recently that in 2000 the threshold from parent to child, it would have been about twice the value of a typical house in Ireland. I suppose if you roll forward to today, that's about maybe 1 times the value of a typical house in Ireland. It's a big change in real terms for people.
Yes, it is. For people on the Category A or Schedule A CAT liability, the allowance or the threshold has gone from 250,000 in 2011 to 335,000 at the moment. Over the same period, average house prices have increased by about 124% and over 130% in Dublin, for example. Likewise, with financial assets, they've increased significantly ahead of that threshold. And at the end of last year, the personal wealth of Ireland was estimated at about 1.1 trillion. Property accounts for 57% of that, and financial assets like pension, equity investments, etc., account for the rest. So you're looking at two asset classes. The property in particular, has increased dramatically in value over the last 10 or 15 years, and the CAT threshold has not kept in line with that. So the net result is that people are becoming liable for much greater tax liabilities purely because of what's happening prices rather than anything else. So that is a problem. It is a significant problem.
Yeah. You touched on it earlier. You mentioned it's not a very popular tax. I suppose there's no popular taxes, but the report you mentioned that the OECD would say the justification for inheritance tax is highest in a low income tax, capital gains tax environment. I suppose a lot of people would feel we don't have that in Ireland. We've high marginal income tax rates. The CGT rate is relatively high. A lot of people feel like it's a double whammy with an inheritance tax.
Yeah, I mean, the OECD view would be that capital acquisitions tax or inheritance tax ticks a lot of boxes in terms of, it is a certain source of income, it is easy to collect, and so on. But it does have some caveats in there. And one of those, as you mentioned, is the fact that it is most suited to in environments where you have low rates of income tax and other capital taxes, but that is absolutely not the case here in Ireland. You know, we have an incredibly progressive income tax system. You know, roughly the top 10% of earners pay close to 80% of total income tax in this country. So we have a very, very progressive income tax system. A small percentage of the population end up paying the bulk of income tax, and likewise with a lot of other taxes. But and these typically would be the people who would be passing on to their children or whoever assets that are, you know, quite significant in value terms. So there is a double whammy. You know, they're taxed heavily on the income that enables them to build up wealth, and then when they pass on that wealth to the next generation, you know, they're taxed on the double. So for people who you know don't pay very much taxation, CAT looks like a great tax. You know, it looks very socially desirable and so on. But for the people who are liable to it, it is a very unfair tax, and you'd have to seriously question the equity of the tax. You know, as I say, you end up being taxed heavily on the financial income that enables you to build up that wealth, and then, as I say, you're taxed at 33% on anything over 335,000. So, and if you look at the Dublin housing market, for example, where, you know, asset values are incredibly high, as you mentioned, people living in Dublin are really caught in this. But you could say the same in many urban areas like Cork and so on. So, I mean, my bottom line is, I think it is a very unfair tax. It doesn't tick the equity box, and one of the reasons is the fact that the thresholds have not been indexed with the inflation that has occurred in the assets that are taxed, mainly property and financial assets. And, you know, at the same time, we're talking about a rate of 33% on income over 335,000. So it's a pretty onerous tax. And of course, the problem is that, you know, if kids inherit a house that has a high value, they may end up actually having to sell that property to pay the tax, or else borrow heavily. To me, there's nothing fair about that, to be honest.
And just, I suppose, focusing on that intergenerational aspect of it, it would seem in Ireland that we have a generation now, an older generation, that's built up significant wealth through property ownership and financial assets. And if you look at the next generation down, they've maybe not had that opportunity to build that wealth yet, or if they have gotten on the property ladder, they're heavily borrowed for doing so. And it would look like there's an intergenerational transfer of wealth coming down the line, and it's maybe the first time this is happening in Ireland to that extent. How do you see that playing out, and what are the implications for Ireland as a result?
Yeah, I mean, I think, okay, if you look at the growth in the CAT receipts over the last decade or more, you know, as I say, we hit 634 million last year. It has increased dramatically over the decade. And that's largely on the back of a couple of things. One is significant increases in the value of assets. Secondly, you know, there is an aging population, and we can get back to that because I think it's very important for the future of this particular tax. But the intergenerational thing I think is really interesting because if you look at my generation, you know, we typically had jobs for life. We had a defined benefit pension scheme. We were able to buy a house in our mid-20s, and that was sort of how we generally behaved. So we were allowed to build up pension assets, we were allowed to build up property assets. Whereas if you look at the current generation, the job for life is gone. Defined benefit schemes have gone the way of the dinosaurs. And at the same time, so in other words, the younger generation do not have the ability to build up a significant pension. So that's one form of wealth that they find they will struggle to build up. And the other form of wealth, housing, obviously the cost and availability of housing in this country, either to buy or to rent, has increased dramatically in recent years, and it is out of the reach of many young people. And we find now that the average age of buying the first house has increased dramatically. And some would say, fine, the European model is you rent more than you buy.
Yeah.
But I think the important point is that the house that you buy becomes part of your wealth.
Yeah.
And if you cannot buy that, and at the same time you don't have a guaranteed pension when you retire, you could have a significant financial problem. So as a consequence of that, we're getting parents of my generation passing on property or assets to their children, and they are being taxed very heavily on that. So I think there's a serious intergenerational issue. And in fact, I would think my generation has pulled up the ladder on the younger generation in many respects, but not least in respect to housing. So I would worry about this younger generation. They won't have much in the way of assets. And at the same time, when their parents pass on assets to them, they're going to be taxed very heavily.
Yeah.
So it's a double whammy for that generation as well.
Yeah.
So I really think there needs to be a much, much greater discussion around the intergenerational unfairness of CAT as a tax.
Yeah. And I suppose looking at tax, you can view it as a tool that's available to government, and that could be to raise funds, it could be to change people's behaviour. You'd look at the plastic bag levy there, maybe for PR purposes. You'd look at maybe the domicile levy there. I suppose looking into the future, what changes would you like to see in the inheritance tax system, or what changes do you maybe see happening in the inheritance tax system in Ireland?
I think the reality is that inheritance tax is going to remain a feature of the Irish tax system. It ain't going away, and I think anybody who believes that it's going away is being naive. And in fact, there is a distinct risk, depending on the political complexion, obviously, but there is a distinct risk actually that the rate could be increased at some stage in the future. So I think we have to take that as a given. So I guess the point is then, okay, as I said in my introduction, over 80% of taxes come from corporation tax, income tax and VAT. They are the three big headings. We have an incredibly progressive income tax system. If you work, if you earn over a certain level of income, which isn't that high, you end up paying a significant amount of tax. That's the nature. VAT, we're also taxed heavily, 23% standard VAT rate. So we already pay a lot of tax, and on top of this, then we have this inheritance tax. What I would like to see, if I accept that inheritance tax is going to remain a feature of the landscape, I think it needs to be altered dramatically to enable wealth to be passed on to the younger generation in a way that actually enhances the welfare of the younger generation. So I would like to see a lower rate, and I would like to see the threshold being lifted significantly, because as I've said, and as the report shows, the thresholds have not kept account of inflation in the asset classes that are typically passed on. So the real burden of that tax has just increased dramatically. I think that needs to be addressed. There are some politicians in government, Neil Richmond, for example, the minister, has recently come out arguing that the threshold needs to be lifted. And that the whole CAT system needs to be reformed. So it's good to see somebody in the political system actually recognising that reality. But on the other hand, it's politically not a very popular thing to do. It's anything that might be seen to reduce the CAT burden could be seen as just pandering to the wealthy in society. I think that's totally wrong, but of course that's the political reality that we have to live with. But that's what I would like to see happening. I think the threshold has to be lifted dramatically, reflecting the inflation in asset prices, and I would like to see the rate coming down as well. I think that would create a more efficient CAT system than we currently have.
It's one of the questions we get asked a lot when we're speaking to clients, and they're maybe looking ahead and saying, well, what's going to happen with the thresholds, what's going to happen with the tax rate. And historically the threshold would have gone up on a regular basis, and we haven't seen that really in the last number of years. So I've kind of given up predicting that it's going to go up for clients, because it's not something that's been happening. So it'll be interesting to see how it plays out over the next number of years and whether they do start pushing that threshold up?
Yeah, I mean, depending, of course, on who forms the next government. But if we got a government of similar complexion to what we have at the moment, dominated by Fine Gael and Fianna Fáil, there is a possibility you might see the threshold being addressed.
Yeah.
I'd be very surprised if the rate was cut.
Yes.
But the threshold might be increased more substantially. But I think you can be guaranteed that the threshold will not be increased in anything like the magnitude of the asset price inflation that we have seen and that we're likely to see in the future. So it could get better, but not dramatically better. But of course, then this is always the risk with any policy predictions. A change in the political complexion here. If we had a swing to the left, for example, you could see the rate being increased, and you could certainly see not much being done on the threshold. So it's a political decision at the end of the day. But my best guess would be that the rate will be left unchanged and that the threshold will be lifted, but nothing like the extent that is required. So it's going to remain a significant burden for people who are passing on assets, and I guess more importantly for the people who are inheriting those assets.
I suppose maybe looking at the international landscape then, so Ireland taxes the beneficiary in an inheritance tax situation as opposed to taxing the estate like maybe the UK does or the US. And I suppose there's a few outliers in Europe where they've abolished their inheritance tax system in the last number of years, but as you say, we don't expect that to happen in Ireland. But broadly speaking, and rates differ from country to country, but Ireland's inheritance tax system wouldn't be unusual from an international point of view, would it?
No, it's not unusual. The rates and thresholds are not that different than anywhere else. So if you want to look at an EU comparison, we're not an outlier. But that doesn't take from the point that the level of home ownership in Ireland is higher than most European countries. So housing is a much more important asset class, particularly if you go back over the last 20, 30 years. Home ownership has been very, very high. It's coming down now because of house prices, but it has been very, very high. So there's a lot of housing assets being passed on, more so in this country than in most other countries. So in real terms, it is a greater burden here. And but of course, the point is, as I said earlier, it's not going to change. It's going to remain a feature of the landscape. And bodies like the OECD, as we've mentioned, do believe it's a pretty efficient tax and an effective tax. But they did have the caveat, as we discussed, that it's particularly effective in low tax jurisdictions. But Ireland is a high tax jurisdiction. And so CAT is not that appropriate for us, but it's not going to change. That's the reality.
I suppose when looking at it internationally as well, it matters that Ireland's it's a relatively high cost of living country as well. So you mentioned that the next generation down, they've either got to buy a house or pay rent, both, which is very expensive in Ireland by international comparisons.
Yes, it is. I mean, getting on the housing ladder in this country is very, very difficult. And there is a cultural thing here in Ireland. Home ownership is a big part of the landscape. If you think back on my generation, the first thing we wanted to do in our 20s was to buy a property. And this love affair with property has always been a feature of Ireland. And, people would go back, and sociologists would say that's a remnant of the famine, and where property rights are so important. And you can argue for the day as to why it's there, whether it's a good thing or a bad thing, but it is the reality. We do like to own our own homes, and that has been particularly the situation going back, in recent decades. So as a consequence of that, a lot of wealth has been built up in housing. That is now being passed on, and it is being taxed very, very heavily. That is the reality of the situation.
You mentioned your generation looking to buy properties in their 20s. I think for my generation it was probably more like their 30s, so you'd wonder what way that trend is going, and it seems like the next generation almost need that transfer of wealth to come from the generation above before they can maybe make that step in a lot of cases.
That's actually the point, because social solidarity is very important in a functioning economy, in a functioning society. And if you have a generation of people coming through that cannot get on the housing ladder because houses are too expensive and there's a lack of supply, but also the ability to build up a deposit to buy a property is being seriously impinged by the high rents that they're forced to pay. So, you know, it is no surprise that the younger generation is kind of angry about this, and this is being reflected in political developments, not just in Ireland, in many other countries as well. You know, we're not an outlier in that regard, but in terms of social solidarity, I think, you know, being able to pass on assets to the next generation without them having to endure a massive tax burden, I think is really, really important for social solidarity. And that is a significant issue at the moment. I think the narrative around CAT and inheritance tax, you know, is very much, well, why shouldn't wealthy people pay tax when they pass on something to the next generation? That misses the point. I mean, the point is that for a society to function properly, you do need a certain level of wealth spread across, and inheritance tax certainly prevents that wealth from being passed on to the next generation.
I think it's particularly interesting if you look at it. It's being framed as taxing the wealthy, passing on their assets, because it particularly impacts on individuals who own property in Ireland. So if you take, say, a homeowner in Dublin who's got a house that's valued at, I don't know, let's say 750,000, 800,000, which wouldn't be unusual in the Dublin market, and you compare that to someone who's passing agricultural assets or business assets to their child, and if those assets are worth, say, 3 million, they'll pay less inheritance tax if they tick the boxes and qualify for certain conditions than the individual receiving that home worth 700,000-800,000 in Dublin. They'll end up paying more tax than the person receiving the more valuable asset.
Yes, they will indeed, and there is a significant inequity there as well. There's no doubt about that. And if you kind of think about it deeply, I mean, you know, I live in Dublin. I've built up a housing asset. I was mortgaged heavily for most of my working life. I was taxed heavily on my income, and that after-tax income was used to service a large mortgage. And suddenly, when I come out the other end of that, and I want to consider passing this on to my children, there is a significant tax liability involved. I just don't get the fairness of that. And it's not politically popular to take that sort of stance, but to me, it is the reality of the situation. And I'm kind of surprised that we don't hear a lot more talk about inheritance tax, a lot more complaints from the public about it. It's one of those taxes we just pay and get on with it. But for people who actually are hit with it on both sides, whether you're a donor or donee, suddenly it becomes a massive financial issue. So I think it's something that needs to be brought up the political agenda. And that's why, you know, I did the report for Nathan Trust on the economic aspects of capital acquisitions tax, and it's good to see somebody actually pushing this agenda out there, getting a discussion going, getting a narrative going. And as I say, Neil Richmond, the Minister in Government, has certainly jumped on the issue in recent times, which is good to see. I would like to see that percolate throughout government and that it becomes a real policy issue.
Well, it's funny you mention it, you know, not being that there isn't much pushback against it. Maybe I kind of have a theory on that. I think it's interesting. I noticed one of the daily papers here, pretty much every day there's an article in the paper on inheritance tax, but in terms of it being pushed, I think there's within families there can be a certain reluctance to raise the issue because the children in the family don't want their parent to feel like they're almost counting down the days to when they're going to get the pot of gold. And I think they're conscious that it's their parents' asset, it's not their asset. And I think the generation above them are maybe very low key in terms of the assets they have and the wealth they have, and just don't really discuss it. And I think sometimes we find when we're dealing with families and we're dealing with inheritance tax, there can be that initial fear of bringing the topic up because I suppose it raises people's mortality as well. But what we find is that once you crack the ice and the conversation begins, you find a willingness on the part of the person who's going to be leaving the asset and the person who's going to be the recipient to engage in proper discussions around it and how it's going to happen, and maybe being very open around, will there be a lifetime gift, will there be an inheritance when the time comes, what it might look like, and then you can start planning for what the tax implications are based on that.
Yeah, I was going to ask you that question actually. What do you experience out there in the real world dealing with people who are already facing these issues or will face those issues in the future? Are they thinking heavily about it? Are they, more importantly, I guess, are they doing anything about it?
I suppose that's the first hurdle we maybe sometimes come up against, is this kind of reluctance to begin the conversation. But as I say, once that conversation begins, you can make a lot of progress. I think what we're seeing on the ground is that there's a lot of families in Ireland who maybe have more wealth than they realise, and as I said, I think there's a generation there that they don't boast or talk about what assets they've built up, and they tend not to prefer not to discuss it. So what we're seeing is more assets in the family, and then what we're seeing as well is, I suppose, if you look back a generation to now, there are fewer children, so you're maybe having a family where the asset value has increased, the number of people who are going to inherit has decreased, so your thresholds when you look across the family are reducing and the value of the assets is increasing. So there's certainly a lot of families where a lot more of them are being pulled into the inheritance tax net in Ireland. And if they don't start to engage in that process of discussing it, then they're going to have a significant tax bill when the time comes.
Yeah, I mean, if you look forward, say, over the next 20, 30 years at population projections, the Irish population is projected to continue growing, but one of the key features within that growth will be the percentage of the population over 65 is going to increase dramatically. It could be 27, 28% of the population by 2040, for example. So one of the implications of that, obviously, is that the more people you have over 65, the more people you have closer to death, and the more assets you will see being passed on. So there is this demographic thing that's going to drive it. And secondly, barring some unforeseen disaster or shock, the likelihood is that the assets that people have will continue to appreciate in value, be it house prices, be it financial assets, whatever. In the long term, they will continue to increase in price. Okay, we get periods when you get setbacks, as in the aftermath of 2007, 2008, but in the longer term, these assets do tend to increase in value. So if you have increasingly valuable assets, an aging population, a lot more assets will have to be passed on and a lot more tax will have to be paid. So I think it's incumbent on all of us, particularly organisations like your own, to get out there and try and raise awareness of this issue. And people need to think about, number one, what are the implications for myself personally? What are the financial assets or other assets that I will want to pass on to the next generation? How can I value those assets? And more importantly, if I project forward, what's likely to happen, the value of those assets? You then think about what is the tax liability of that for the next generation. And then I guess the third part, and I think this is where Nathan Trust can really play an important role in organisations like that. It's to help people try and plan for that. What can you do about it?
I suppose there's a lot you can do. So I suppose the first thing I would say is, anyone, once you reach a certain stage in life, you need to have a will. That needs to be clearly drafted as to what you want to happen to your assets when you pass. You need to keep it up to date for family changes. Families expand over time. And then once you have that in place, I suppose the next thing to look at is, understand what are your assets, what do you own, what are the values on those. And once you start that conversation with people, I suppose it starts them thinking around, what assets do I need to retain? The first thing we'd say to anyone coming into us is you need to retain sufficient income and assets so that you're not going to struggle financially. There's no point giving away too much of your wealth while you're alive. It can pass when you pass to the next generation, when you pass on. And once you factor that in, I suppose it's a matter of maybe looking at it, and you can do an awful lot of planning around inheritance tax. It's one of the better taxes from that point of view. So that can involve very simple steps. They could be looking at lifetime gifts to family members. That can be small gifts each year that qualify for an exemption, so it doesn't eat into the thresholds. It doesn't sound like much. It's 3,000 a year from any one individual to another, but if you've got a couple and they've got a number of kids, it's 3,000 from each of them to each one of their children. They could look at involving grandchildren where they want to plan for education costs down the line. They can involve spouses of children, so you can expand the amount of people that you're passing wealth to, and significantly reduce the inheritance or gift tax that's going to be paid. Particularly if you start doing it, look at it early. That would be one of the key things. Maybe look at it before you think you need to. The sooner you engage in planning exercise, the more scope you have to reduce the tax bill.
Yeah, I guess my own personal experience, I have two sons, and we my wife and myself have been doing the small gift exemption for a number of years now.
Yeah.
And the oldest guy has just bought a house, and we were able to, he had a lump of money,
Yeah.
Tax-free from us because of the small gift exemption. And okay, 3,000 parent to kid.
Yeah.
It doesn't sound like an awful lot, but over time, if the two parents give 6,000, it can build up into a pretty substantial lump sum. And the most important thing is, it's going to be tax-free from the perspective of the child, but also, they're getting it at a time when they really need it.
Yes, I think that's very important.
Yes, it is indeed.
Yeah.
Getting an inheritance in your 60s or 70s.
Yeah. Yeah.
it's much more important if you can get it in your 20s or 30s.
I think the other thing with the small gift exemption is, you're right, it adds up over a number of years, and then if you can preserve a child's threshold, whatever you're passing to them in the small gift exemption, if you know they're otherwise going to exceed the threshold, whatever you pass to them, of every 3,000 you pass each year from each parent to each child, there's €1,000 tax saving there. So if you multiply that over 10, 15 years, it does make a big difference. It's a
significant amount of money, absolutely. But it still doesn't take from the point that the threshold is too low. It hasn't kept account of that price inflation, so you certainly would like to see that threshold being increased significantly.
Yeah.
Otherwise, regardless of what you do, there's a problem. I remember at one stage looking at some of these insurance policies that are in place to cover inheritance tax.
Yeah.
The premiums that were being quoted were just incredibly high.
They're pretty high. We don't see a lot of them being used in practice. I suppose again, it's one of these things that the earlier you start it, the more reasonable the premium is, albeit you're going to pay it for a longer period of time. They do tend to have a positive result over time. So if you look at what the inheritance tax liability would be otherwise versus what a person will typically pay into the insurance policy, there is a saving to be made there, but you do need to be consistent in paying in. If you stop paying, you lose the benefit. So I suppose that's the key point, that it is a long-term commitment to paying into this insurance policy, but there is definitely a saving to be made there. Okay.
Yeah, well, I guess the problem when I looked at this, the sort of premium that was being quoted, given my stage in my working life, my earnings, it looked way too high.
I think to be honest, you marry that then with the fact that a lot of people, their wealth is tied up in property. It's not necessarily in cash.
In cash, yes.
It's a significant.
So you're
expense.
Asset rich but cash poor. Absolutely,
potentially.
That's an issue. Okay.
Yeah.
You mentioned that as a firm you deal with a lot of international clients. What is the experience there?
I suppose we got into that area because we dealt with a number of clients coming to us, and they found it was maybe hard to get advice covering the international aspects of tax. I suppose in Ireland in the last 20 years, there's a lot of people who are living here who are maybe born elsewhere and have relocated here. There's a lot of Irish people who have moved abroad. there are families where you've got people in Ireland, outside of Ireland, assets in Ireland, assets outside of Ireland. So it can be a complex area, and what we deal with typically is we deal with a lot of people who are relocating here, and maybe what they're looking at is, well, if I relocate here, am I looking at a potential inheritance tax surprise, a nasty surprise if something happens? We deal with people who are based abroad and are maybe inheriting a property from Ireland from a relative, be it a parent or aunt, uncle, and we deal with people in Ireland then as well where they might be inheriting a property from or an asset from a parent in France, Croatia, the US, UK. Could be any jurisdiction. I suppose we see a lot of UK and US in particular, but we've dealt with multiple locations where people are inheriting. So I suppose in a situation like that, you're maybe looking at how is the other jurisdiction going to tax this inheritance or this gift, and then how does Ireland look to tax it depending on the person's circumstances, and how do the two interact? So does one jurisdiction give a credit, which jurisdiction gives a credit for the tax suffered in the other jurisdiction? You can have vastly different treatment of inheritances or gifts from jurisdiction to jurisdiction as well, even in terms of how it's framed. So there'd be a mismatch between Ireland's system and the system in another jurisdiction. So it's kind of looking at all of that for people. We kind of do all of the basic stuff like calculating the liability for them, filing the return on their behalf, arranging payment of the tax to revenue. We do consultations with people, and then we can do more involved tax planning for someone where they're maybe moving jurisdiction and they're wondering what's the change in their situation now, what's it going to look like. And in a lot of cases, I suppose people just want to understand what that landscape is going to look like for them going forward. We deal with people coming from the US where, from a federal tax point of view, inheritance tax is not really a consideration because they've got a very high threshold there. So it can come as a bit of a surprise to them when they're looking at Ireland and seeing what the tax landscape looks like here. There's trusts, I suppose, is something we see a lot of in terms of clients moving from abroad, where you can have jurisdictions where trusts are very, very common. So, for example, Australia, they're used an awful lot from a family wealth planning point of view. We don't really use trusts in Ireland. The rules are set up so that you're penalised from a tax point of view in using them, but we do see them coming in from other jurisdictions. So you then have to have a look at that and see how does the Irish system treat that. So I suppose it's a case of maybe educating people as to what the system looks like, what their potential tax liability might look like, and then any steps they can take or anything they've got to be cautious of so as not to make a misstep and suddenly arrive in a situation where they've got a problem.
And do you get any sense from international people looking at Ireland, moving to Ireland, working in Ireland, whatever, that they see this as a competitive disadvantage? Does it deter people?
I think it certainly they see it as a pretty high tax burden. We deal with a lot of people who are maybe living here and working for multinationals and from other jurisdictions. So, they'd be on good salaries, but we're not talking people who are multi-millionaires here. And I think that they're generally surprised when they see the inheritance tax burden here, and it is a concern. When they move here first, where they're non-domiciled in Ireland, they've got a window of 5 years where they may not be subject to inheritance tax in Ireland on an inheritance received abroad from someone without a connection to Ireland. But once they go past that point, it does become a concern. And I think broadly speaking, the tax system in Ireland, a lot of the individuals we were dealing with in that space are kind of internationally mobile, so they can relocate to another jurisdiction, and tax is a consideration for them. They do see Ireland as a very heavy tax burden country for them compared to other locations that they may have worked in or where they're coming from.
Yeah, and I guess the other side of that would be, well, there is a high tax burden, and I guess international workers would be in that segment paying the bulk of income tax anyway because they're the higher earners.
Yeah.
But do you get any sense that they look at the quality of public services they're getting for their taxation
Well, funnily enough, one of the reasons we get for people saying, I'm here for a couple of years, but I won't stay beyond that. A lot of the time it's the weather, but
nothing we can do about that.
Second place, I suppose, is tax and public services. So certainly, I suppose, we do hear people saying that it feels like it's a bit disjointed in terms of the level of tax that's being paid versus the level of public service that's being delivered. Housing is another big concern for people who are working for the multinationals and moving between jurisdictions. It's a big concern, first of all, in moving here and being able to find somewhere to live, and then secondly, the cost of that housing as well.
Yeah. I think the IDA is becoming increasingly focused on housing as a serious competitiveness issue for Ireland.
Yeah.
So, but the taxation environment is obviously also very, very important.
Yeah, Jim, very interesting. Thanks for walking us through your report and covering the inheritance tax area with us. I know you're going to be speaking to my colleague Mark on the topic of Ireland as a location for businesses and maybe the tax aspects of that. So I'll let you get on to that now with Mark.
Yeah, great. I guess my parting comment would be, that while capital acquisitions tax isn't a huge part of the tax system, it is an important part of it. It ain't going away. It's going to remain there. In my professional life, I've heard so much talk over the years about the need to engage in financial planning, as in making sure you have a pension, whatever else you need for financial security. But I see a lot less discussion of tax planning, and I think at the end of the day, particularly for a certain age segment of the population, tax planning is absolutely essential. So I think people, in relation to inheritance, people need to understand the value of what they're going to be passing on, understanding the tax implications for that, for the people who are receiving those assets or those inheritances, and thirdly, and I think most importantly, engage in tax and financial planning. What can you do about it to try and reduce that tax burden to the greatest extent possible?
Absolutely.
So I think you have to be commended for raising this as an issue, because I would like to see it becoming much more discussed in the public narrative, to be honest.